Understanding mortgage loans can be complex. I have 4 loan types that I'm going to roll through rather quickly to give you a basic understanding of what you could be looking at if you're attempting to buy a house using one of these loans. The first one we want to talk about is conventional financing. Most people think in order to do conventional financing, you need 20% down, and that's not true. Minimum requirements typically are 5% down, so that means you're going to be required to carry mortgage insurance. Mortgage insurance is there for the lender in case the borrower defaults. It's not to protect the borrower at all. It's there for the lender. Now, typically, score requirements in the conventional world, 620 can get it done. However, if you're not putting 20% down, your cost for mortgage insurance is going to be really expensive. Typically, if we're looking at conventional and they're only putting, say, 5 or 10% down, at that 680 is really where I'm looking for the sweet spot in order for it to make sense, other than like an FHA type loan. Now, the other thing with conventional financing is Fannie Mae and Freddie Mac have a program called Home Ready, Home Possible, which only requires a borrower to put 3% down. You get a discount on rate, and you also get a discount on your mortgage insurance. However, you can't just be anyone and qualify for the program. I have a map or a link in the description that will bring you to a map. You put in the address, and if you're at 80% of the median income for that address, you could potentially qualify for Home Ready, Home Possible. It's a great program. The next loan that we're going to talk about is FHA. That doesn't stand for first time something or another. It's the Federal Housing Administration. Again, you don't have to be a first-time home buyer to get it. Your requirements are 3.5% down and typically a 580 credit score, and you can get into finance. There is going to be mortgage insurance. However, it's different than private mortgage insurance. It's not based on your credit score. It's just public mortgage insurance. So if I'm at a 700 and you're at a 580, we're going to pay the same rate for mortgage insurance, and we're both going to be required to put at least 3.5% down. The other thing that goes with FHA is, let's say you don't have that 580 credit score, let's say you're a 550, you could potentially still qualify for an FHA loan, but you'd be looking at putting 10% down. Might be easier just to get scores up than trying to save for that 10% and getting an FHA financing, but it's available to you. The other type of loan that a lot of people miss is called the USDA. That loan is 100% financing. It's a really inexpensive mortgage insurance, and it's not that super hard to qualify for. However, it's a rural loan. Now, when people think rural, they think they have to buy a farm or they have to live way out in the country. But for example, the town that I live in has 17,000 people in it. It's 40 minutes from the Twin Cities, and it's 100% USDA. So you could live in a neighborhood next to a bunch of people and still qualify for 100% finance. I have a map in the description. You can take a look and see what USD areas there actually are. The last one is the VA loan. That's for our veterans. Again, 100% financing, no mortgage insurance whatsoever, but you have to be a veteran to qualify. And again, that is probably the best loan available out there. Those are the basics of mortgage loans. Hopefully it helped you. If you have any questions, feel free to drop a comment. Thanks for checking out the video. We'll see you at the next one.